Todd, I saw some of your colleagues in Vegas at the National Multi-Housing Conference, and two top economists, both of them independently named the Twin Cities as one of their top 5 markets for the next 3 years.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, welcome back to the show. I'm your host, Todd Dexheimer. With me, excited to have again Heidi Addo. Heidi, with Michel Commercial, by the way. Heidi's been on the show quite a few times. Heidi, I thought you were on more recently, but the last time you were on was a Q2 2025 update. So it's good to have you back on the show, Q1 2026 update. So welcome back.
Thank you so much, Todd. Glad to be back. Always love being on your show.
Well, Heidi, why don't you give us a rundown since you've been on the show last Q2 2025? I don't remember exactly when, but let's just call it sometime in Q2 2025. You were on the show. What has happened since that time? And so take us from there till today, and then we'll talk about kind of what's going on in the future.
Perfect. Well, supply and demand is the story of the Twin Cities, and we saw it coming, and now it's really starting to rear up. And so what we saw was we've got very limited supply in the pipeline, and as time continues, and it's harder to get capital to come here for a variety of reasons we can talk about, but we have continued limited supply. So all of these submarkets that had a lot of new development, they're getting absorbed. And so we're starting to see stronger occupancy, and submarket by submarket rent growth is popping up. Currently, something interesting is the front runner for rent growth right now is West St. Paul.
Yeah, wild.
Which East Side neighborhood, east of the Twin Cities.
Yeah.
And it's a working class neighborhood, a lot of great folks there. And the only reason that it's supply constrained is the only reason it's the rent growth leader is it's supply constrained. Now, I mentioned this in a post recently, but there are 400 new units coming online to West St. Paul. That is great for the city, great for the Twin Cities, which also means that rent growth in West St. Paul is going to actually fall. It's likely going to become muted again, because that is how housing works. You need
for a period
more
of time.
supply. Exactly, for a period of time, and then it'll go right back. But you need more supply, and that is the only real way with supply and demand to make that demand slightly lower, which means rents are going to stabilize or just remain more neutral versus the growth that we're seeing right there.
Yeah. Yeah. I actually, when we moved to the Twin Cities, we moved back to the Twin Cities, my wife and I rented a house in West St. Paul. And so I got to know the area pretty well. We rented a 2-bedroom, 1-bath duplex, and I believe our rent was $1,060, if I remember right, for a 2-bedroom, 1-bath. That was back in 2006 or so. So it was a while ago, seven, maybe it was a little later than that. But anyways, it was a while ago that we rented that. But it's fun because I was over there not too long ago, a couple weeks ago. And I remember where the old Kmart was. That's all apartment buildings right now. There's several other locations that we drove by. It's all apartment buildings. I saw an old kind of warehouse type building that they knocked down, and they're planning on building apartments. That might be, I'm sure that's going to be some of the 400 that you're talking about. So yeah, it's fun when you see the changes, and then you see, I was shocked. You guys came out with, I think you posted it on LinkedIn, and it was definitely in an email, 5.1% rent growth in West St. Paul. Tell me though, that's West St. Paul. For those of you who don't know the Twin Cities, there's St. Paul is right next to West St. Paul. West St. Paul is its own municipality. It's not the west side of St. Paul. It's its own city. But then St. Paul is right next to it. And the west side neighborhood butts up to West St. Paul. And that had the worst rent growth at negative 0.8.
Yes.
Do you know why that was in that neighborhood?
Gosh, well, that West Side neighborhood has had a lot of challenges. And I can't speak to him exactly, but I know Todd, you and I offline talked about there is political challenges happening right
Mhm.
now in Minnesota. That
Yeah.
neighborhood is highly affected by those for
Yeah.
the population that lives there. But that West Side neighborhood also had an influx of new
It
deliveries in the
it
past.
did. Yeah. Yeah.
And that it's a very small area. It's just a
Mhm.
neighborhood. So all of a sudden you bring in a couple hundred units to a very small geographic area. And it's
Yeah.
not so different than, let's say, Lower Town in St. Paul. For people who know St. Paul, you've got all these neighborhoods just like any urban center. And these neighborhoods, while dense, because they are urban centers, they're geographically very, very small, a couple of blocks. So we were talking with the client recently about property they have in Lower Town. And Lower Town recently had 200 new units and an office to apartment conversion come online.
Yep.
And it very much created very high vacancies in all the other surrounding neighborhood buildings in Lower Town. And it's if you bring 200 units to a Plymouth where I live, it doesn't do much to the landscape, but in a very small geographic area, especially St. Paul already is dealing with a host of issues.
Yeah.
It really changes things. Once again, though, you mentioned it. This is a short-term problem we're having in the Twin Cities. Once all of the supply is absorbed, we have very bleak forward-looking construction numbers, meaning there's not supply coming in amounts that are meaningful and necessary. So demand is going to continue to be really strong. And Todd, I saw some of your colleagues in Vegas at the National Multi-Housing Conference, and two top economists, one was Carl Whittaker of RealPage, and another economist from John Burns Research. Both of them independently named the Twin Cities as one of their top 5 markets for the next 3 years.
Oh, wow.
So together, collectively, they named Chicago, San Francisco, the Twin Cities as one of their top 5. And then those researchers had some different ideas for the other two.
Hmm.
But the things that those 3 markets had in common were limited supply.
Was that the overall reason they would consider those top markets was the supply?
Yes. And this was a 3-year view.
Hmm.
If you look out 10 years, then we really need to pay attention to where is the job growth and where are the people moving to.
Yeah.
But in 3 years, a lot of these, Austin, Texas, for example, they have currently are dealing with a ton oversupply. So rents are dropping by the hundreds and hundreds of dollars.
Yeah.
And buildings are vacant at the rate of 40% or so
Jeez.
in some cases. And so it is in the short term, 3 years, you really have limited supply, continued demand. In 10 years, is Austin going to absorb that? Are they going to have greater job growth than
Yeah.
the Twin Cities? Yes.
Yeah. No doubt. Yeah. Yeah. I saw a statistic. I have not fact checked it, so it could be wrong, but I saw a statistic that Austin, Texas is back to pre-pandemic rents. And
Wow.
that's crazy because in 2020 or 2021 or 2022, so right around there, I remember seeing stats that Austin was, rent growth was 20 plus percent year over year. And now it's gone down, 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 down. And if that stat is correct by that person that put it out there, I think it was on X. If that stat is correct, that is a really big drop. But you're right. Eventually, those will come back. It might take 3, 4 years from now, but those will come back. What the Twin Cities has going for it is that we do have growth, although not explosive. We have population growth. Talk about you had a stat I thought it was very impressive on the household income, and so talk about why is the Twin Cities strong? Why do you see it strong in the future and today?
Right. Well, we need to keep the Twin Cities. The economy needs to be a really big factor in the Twin Cities and in the future of whether it's politics, legislation, anything. Because what we have going for us right now, we have 17 Fortune 500
Yeah,
companies, and we
that's a
have
lot.
10 more Fortune 1000 companies.
Mm.
So we need to stay business friendly because our weather's not attracting people.
Nope.
We have great people here, and we have very educated workforce. And so our household income in the Twin Cities is 102,000
That's
per
amazing.
household. That's insane. And, I know other places, especially, southern states, their household income is less than 60,000.
Yeah.
So we're just doing incredibly well. We're 21.8% higher than the US median.
That's what I was going to say. I think the US median is close to 80,000 right now.
Yes, about
Seven, seven,
83,000. Yep.
83. Okay. Okay. Yeah.
And so we are very wealthy. We have really strong wages. We're a super educated workforce. And, part of the problem we have here is our rents are very low. So our rent to income ratio is 18.4%. That means that people spend 18% of their income on housing. Well, in the nation, people usually spend 30% of their income on housing.
Yeah.
And,
Well,
this is
that's a problem not for the renters though.
not for the renters, but it is a problem for developers
Yeah. There
because
you go.
our rents are not keeping up with what we need to do to keep up with actually building.
Mm.
So the problem is going to be a renter's problem in the future because we're going to continue to be supply constrained until rents get to a place that you can make numbers work for new development.
Building
So
it.
I'm hoping there's other ways we can build without having to raise rents significantly. But currently, if you look at the deals that recently sold this year that sold for over construction costs, which is about 300,000 per unit, their rents were over 2,400 a month.
Hmm.
So if you look at the delta between current rents, our average is 15, I'm going to use round numbers, $1,560. That's our average rent in the Twin Cities. We know rents need to be about $2,400 to make new construction just break even work.
So that's an $800 gap right there.
So when we're talking, well, not me, but when people are talking about affordability and policies to restrict rents, what you're really doing is restricting housing creation,
Mhm.
which eventually bites you in the butt. And you've got a big issue. And then municipalities have to get involved to solve the issue because it's just is recurring.
Yeah. Yeah. You mentioned it's harder to get capital to come here, but then you mentioned that John Burns and Carl Whitaker, they said that this is like one of the top five. So why is capital not coming here?
Oh gosh. I mean, it's a host of reasons. First of all, the affordability piece. It's so affordable here that to make capital, like just imagine I'm working with developers all day long and they're like, we'd love to build here, but
We
why would our
can't.
investors invest here when we are looking at what we just sold our property for and it's well below what it costs us to build?
Hmm.
What kind of a return can you get if you can't achieve those over $2,000 price points?
Yeah.
So what are developers doing? They're choosing the most hot affluent neighborhoods and they're building in them. And one example, Dorn Companies is building a super luxury property right in my location in Plymouth because that product is the only thing to sustain the cost to build the product. And so that's one example. It's just the rents aren't keeping up with the cost to build.
Yep.
The other reason is we have a political issue here. Two things we have going on. Right now we have a short-term problem, but that is a problem that the ICE is in Minneapolis,
Yep.
and it has caused lots of issues for humanity. And also it's just put people on the pause.
Yeah.
They're thinking, there is just too much noise going on here. We don't know. We're going to let things settle in the Twin Cities right now. So I gave an interview to Finance and Commerce, a development that was scheduled for Minneapolis, pulled the plug, Capital pulled the plug on that.
Was it because of what's going on in the
Yes,
headlines in the news? Yeah.
yes.
Yeah. It's really interesting. And I wanted to ask you about, obviously everybody that's listening, if you haven't heard about it, actually kind of good for you because you've probably been hiding out in the woods somewhere. So that's awesome. I wish I was there with you, but ICE, you got the protests, you got the fraud. Twin Cities, Minnesota has been in the news for like a month and a half or 2 months, like constantly. And whether you are happy ICE is here, whether you're mad ICE is here, whether you're whatever, it doesn't matter. It still is in the headlines and it's negative press. And so how you mentioned the developer, you have phone calls every day. I don't need you to get into details and name any names, but overall, between you and the other brokers that you talk to, maybe the other lenders that you talk to, uh, tell me about like the the type of conversations you're having.
Yes. So, kind of top down, talking about developers, it is once again stifling the capital flow here. Developers need capital to be able to build these properties. People are not sitting around liquid with $50 million. So, you need capital, outside capital to come in. So, the
Yeah.
flow of capital. So, top down, developers are really struggling to get things off the ground because that capital is uncertain. And in times of uncertainty, people just pause. If there's easier places to do business, why not do them there? Right now, it's difficult to do business in the Twin Cities. That is the truth. And then, so then you get down to buyers. So let's just talk about out of state buyers.
Yeah.
Well, we had an out of state buyer look at a large property, offer on it, and they just purchased a large property here. That same capital partner said no. They are just saying no to
Mm.
Minnesota. So now you've got a buyer who has a capital partner that said they said no to Minnesota. They don't care if it's localized, they just said no to Minnesota. So once again, you got a flow of capital. And then you have local buyers who know the Twin Cities and who are very game, like yourself, Todd, who are saying, we know the Twin Cities, we know all these submarkets, we are game on. We will buy in Minnesota. We will not buy in Minneapolis proper. We will not buy in St. Paul. So right now, in some challenging areas of St. Paul, we've been working on deals and cap rates are up to 8%
Oh,
in some
wow.
cases in St. Paul. And the buyers are looking for cash flow. So, I mean, there's opportunity in St. Paul.
Yeah.
Now, the best neighborhoods of St. Paul don't have that huge cap rate expansion. I'm
Yep.
talking about some neighborhoods that are more challenging,
Yep.
but newer properties in St. Paul are going for an 8 cap. And it's so localized. And that is really indicative of rent control and how public policy has really also stopped the flow of capital and
Mm.
interest, in business interest. So, but other people are really seeing opportunities in the market. There's an opportunity for private buyers. A client of ours, we sold a large portfolio. They were able to buy a brand new institutional type property, and they're a private family office. And part of that is they paid the highest price. The second part of it is right now, with other groups saying they're going to look elsewhere, there's opportunity for private buyers right now in our market to capitalize on incredible properties, brand new properties, properties of scale. So there's definitely opportunity here. And then if I break it down one more, the management companies right now are going through it. They are struggling because if you are super well located and you've got very high affluent residents, the likelihood is that things are more business as usual. But if you're in a community with a large immigrant population, people are not going to work. People are
People
staying
are
in.
scared.
People are scared.
Yeah.
ICE is outside your door. ICE has been in your building multiple times.
Yeah.
Um,
And
and
and even if they haven't, you're nervous because, well, quite frankly, I mean, it spreads. Everybody's talking about it. You're nervous whether ICE is ever going to come or not. You're just they're nervous, right?
yeah, and some,
I heard a story of a local couple who I think was from Asia somewhere, and they're not illegal, like they are legal, but they had a food truck business and they just closed shop because they were so nervous about it. Now, you can say, well, that's a little too much or whatever, but it just is a fact of life that a lot of people are very nervous about it. And so they aren't going about their life, as you mentioned, like they normally would.
right. And, I was talking with a woman who leads a institutional management company here, and she is saying they're having so many issues of what to relate to their property managers because their
Mm.
property managers are getting questions from the
Yeah.
residents. What are you doing?
Yeah.
And Are we letting ice in this building? What is the protocol? What is this warrant? Is this a warrant that's like there is just so much happening and so many questions and so much uncertainty that it is causing fear. That's the reality. It is causing fear.
Yeah. Yeah. Hopefully we can get back to some sort of semblance of normalcy here over the next, less than a month. Hopefully it doesn't take that long. It unfortunately, yeah, it's part of our life right now in the Twin Cities. But there's so many good things going on here, despite what I think people hear in the national media. If you just listen to the media, the Twin Cities and Minneapolis or Minnesota is the worst place to live in the world. I think people from all over the country are like, oh man, look at that place. I'm glad I don't live there. But at the same time, if you are from here and you know it and you see it, I mean, the protests are literally happening in like a 3 block radius, right? A lot of that stuff is sensationalized by the media. Not, I don't want to like say that it's not happening, but it's over sensationalized. Let's talk about the good things. All right. We've already hit on some of the good things, but how about rent growth? What are we seeing for rent growth here?
Yes. So currently 3.2%, which is actually fabulous because in our history before this, that was what we were just trucking along at.
Yeah.
And now we're trucking along at 3.2%. And that is before the full absorption of the units that came online.
So yeah, because
So
we had 15,000 units come online in 2024. We're still absorbing those. What do we have coming in online in 26? I know it's pretty low.
less than 5,000, and it's
Yeah.
probably less than 4,000, but I'll stay hopeful. Um, but one example I love to talk about is Shakopee. So Shakopee is a southwestern suburb, and someone once I'll say this on your someone named it Shakapoko lately because they've been like really trying to be like the entertainment hub of the Twin
Oh yeah,
Cities.
they definitely are.
Bring it on, Shakopee. Love that for you.
Yeah.
And so Shakopee is a great example. We've been working with a client for years. They built a brand new property, institutional size, in 2019, and they have
Mm.
never reached 95% occupancy. Never. And it's 2016 now. So they've had this whole time period where it has just lagged. It's been hard and it's been vacant. And now in the last 4 months, we've been valuing it like biannually and quarterly, getting ready to possibly launch it. And in the last 4 months, 98% occupied.
Mm.
That is absorption in motion.
Yeah.
They had a ton of units come on. They had hundreds of units come to, once again, a city that said build here. So all the developers built there.
Yep.
And then it took some time to get those units leased up. And now this property never leased up before, leased up in 3 months.
Wow.
That's
That's
a great
awesome.
example.
That's
So
awesome. And the rents are probably growing too, I would
probably,
imagine. Yeah.
yeah, exactly.
Yeah.
Once you get that occupancy up, you can really grow those rents.
Hmm.
And another place that we're seeing that, which is tertiary, is Wright County. And Wright County, a client of ours was new development. They're raising their rents by 5%, which
Wow. And
is
that's not, I wouldn't call that Twin Cities. I
no,
mean,
it's not one of the 7 county metros. It's
no.
maybe 13 if you consider 13 counties.
Yeah.
And so Wright County, which is 45 an hour out of the cities, maybe at least, maybe more, 5% on
That's really
brand
strong.
new, and that's actually 2 properties in Wright County. I've 2 different
Hmm.
owners doing that. And so that shows their occupancy is already strong and they're able to push the rents. And one of those owners shared with me that they're not getting pushback on people moving out. And part of the question is, where are people going to go? When you have a lot of demand and limited supply, you raise your rents and people don't have other options.
Yep.
They're going to stay.
They're going to stay.
So,
Yeah. Yeah. That's interesting. Tell me what happened in Wyzetta.
yes. Okay. So Wayzata, for some of your audience that might not be local, is a very affluent pocket of the western suburbs all around the lakes. People, I think this is a joke. We should look this up, but average age is like 75. Like
Yeah.
old people, old money, very wealthy.
Household income's probably pretty high too.
Very, very high.
Yeah.
I think the average house is at least 1 million, 2 million, like
Yeah.
something like.
Yeah.
So in Wayzata right now, a large property just sold, over 100 units sold to a private buyer out of California, and they do a full renovation. So they took property, it's called Wayzata Woods, and they bought Wayzata Woods for a really strong price for a property that was in disrepair. And I was just with the client yesterday, and they did all new windows. They did a full renovation, similar to what you did in Champlin, and they brought on pretty much 100 renovated units at one time. So what happens? All the other neighbors are like, what is going on? Our rents are dropping,
Wow.
and rents have dropped by $400 in Wayzata.
That's amazing.
But once again, this is a very short-term problem.
Yeah.
The moment Wayzata Woods is leased up, game on. You're
Yeah.
back to normal and you're back to thriving. And the other thing too is that property had really long-term residents who lived there, and those residents did not reflect the city's wealth. And so what the owner is doing, whether people might disagree with what the owner is doing or not, but what the owner is doing is raising rents by like $500 from what they were before. And so they are going to have a full retenancy of that building. And that's part of this surge where there's just a ton of new units. They're going to get leased up, and then Wayzata is going to be back to trucking along. But the reason that I really dug into Wayzata was I had a different client call me, and they just remodeled some of their properties in Wayzata, and they're really struggling to lease them up. And they were like, what's going
What's
on?
happening?
And so I was able to tell them what's happening. And so I think it helped them a little bit because they were wondering, did they make a big mistake?
Yeah. Yeah.
And my answer to them is no, you did not make a mistake. You're doing the right thing. Wayzata needs renovated units. That is the demand in Wayzata. And you just happen to renovate your units at the same time as this person did. And you're all online at the same time,
Yeah.
looking for that same resident.
Wait till June, July, you'll be fine.
Totally.
Well, Heidi, if somebody's looking to buy in the Twin Cities, they're like, hey, I'm not scared of the news cycle. I get what's going on here in the Twin Cities. It's strong. It's got good rent growth, 3.2%. Vacancies going down. There's no building happening. Like, I like what's going on here. I want to buy. Where do you see the buying opportunities? Where should people be looking?
Great question. So if you're just wanting to get in the Twin Cities for the first time and you're looking for more of like a stable investment, maybe a value add, definitely the suburbs. People are looking at the suburbs. Now, if you are wanting the biggest bang for your buck, you're willing to roll up your sleeves and you're wanting really solid returns, you should start in St. Paul
Hmm.
because returns in St. Paul are 8% plus. And so there's a few groups, there's like two groups buying up stuff in St. Paul for 60 a door.
Yeah.
And they're not focused on an exit. They're not going to be able to exit in the near term. They are going to have to hold on to those for some time, but they are all focused on cash flow. And one of those buyers told us, call us when no one else wants your deal. And so I'm seeing them. We didn't have to call them, luckily, because we had other people who did want to buy a deal for a better price. But they're buying the deals nobody wants, and they're buying them for 9-10% cash flow immediately.
Wow.
And so if you're willing to play ball in St. Paul, there is opportunity there. And then Minneapolis.
Is it is real quick on St. Paul? Is what's holding people back rent control, or is it? Do you see anything else?
Well, these locations are not the best locations, St.
Sure.
Paul. So you have a pocket of, you've got multiple pockets of St. Paul,
Yeah.
but let's just call it the Highland pocket of St. Paul, Grand Avenue, Highland
Yeah.
Summit.
Yeah.
All of that is great real estate. That real estate is not being sold for an 8 cap.
Yeah.
That's
Can't
great,
imagine.
great location.
Yeah.
Other neighborhoods in St. Paul are struggling. Pretty much that one location is doing well. Not all, many neighborhoods are
Yes.
struggling. Those struggling neighborhoods, they're going to be taxing on your staff. There's going to be repairs that need to be done. There's lower income residents. So there's things that, however you want to run your business, some people don't like to be in neighborhoods that are more challenging. So You have to decide what's best for you. But
Yeah.
groups that are willing to be in those neighborhoods, they're getting strong returns.
I mean, 60s a door, that has to be, you know, 2016 prices.
Yeah, yes, yes.
I mean, that's a big drop.
Super shocking. Super, super
Because
shocking.
those were going for
Nine
100 a door, 90 a door.
I sold for someone who won't go named, but someone you know well. I sold a property for 100 a door, and there was a murder in the property during due diligence.
Oh,
And I mean that's it was a tough neighborhood, a very tough neighborhood. And 100 a door. Look at how things have changed.
40% drop, close
Look
to
at
it.
that.
Ooh.
It's insane. And you know what the reality is? The buyer pool is small.
Yeah.
And that's why the client said, I'm the shark when the blood's in the water, call me. Because when the buyer pool is low, you've got one, two people interested. They
Yeah.
set the if the person's selling, a building will sell at a price. And whoever is, if there's only one person interested, that person sets the price.
Yeah. Hmm. Wow. What's going
So
on in Minneapolis? You
yeah,
started to say that.
yep. Minneapolis is recovering and the absorption is happening pretty quickly. Minneapolis has a lot of opportunity. Now there's the North Loop in Minneapolis. That's one of the number one neighborhoods.
Yeah. Yeah.
That location is absolutely thriving. Properties are being sold for neutral or negative leverage. And so that neighborhood is small geographically and it's it's beautiful. It's great.
Yeah.
Other neighborhoods in Minneapolis are struggling. Now, we had two murders in Minneapolis recently, two deaths, Renee Good and Alex, am I saying something? Preddy.
Pretty. Yeah.
Preddy, yes.
Hmm.
And so there is challenges happening in Minneapolis, people
Yeah.
feeling unsafe. But there's also absorption happening in Minneapolis. Client of ours that we recently spoke with, his property has been struggling with occupancy since George Floyd's murder.
Hmm.
And in the last, I think it was like the last 2 months, he's been sitting at 90%. Now they're up to 96% in just 2 months, historically 90% or lower. So that's absorption in action. That means that people are looking for housing.
Yeah.
Concessions are burning off. We're not really seeing rent growth outside of the North Loop, but it's starting to emerge. And what really is happening is concessions are getting burned off in a meaningful way.
Yeah. Yeah. I think I saw, and I don't remember how old this stat was, that Minneapolis had like rent growth of like 0.8%, somewhere around there. So some growth, not a lot. But the same stat is, I think, on your uh, spreadsheet that you guys sent out. Downtown was right around 3%.
Yes.
So I mean, that's pretty strong. And North Loop, yeah, I don't know if that was it was clumped into the downtown or not, but 3% is good rent growth. So if that can kind of spread from the downtown out to these other neighborhoods, maybe some tougher neighborhoods won't get there, but that's showing that the demand is definitely there. So.
Sure.
Well, Heidi, this has been really good. I appreciate it. Anything else that you see 2026 right now or into the future that we haven't hit on that you want to make sure our listeners know about?
Well, keep an eye out for that rent growth. So if you own properties in the Twin Cities and your occupancy is 95% or more, start to push your rents. Start to
Mhm.
push them 3, 4, 5% until you start getting pushback. But I think people are going to be really, really surprised that a 5% renewal rate, you probably are not going to have a lot of move outs.
Yeah.
And so there is money to be made, and the affordability is still here. People might give me a hard time saying to raise residents' rents, especially during this hard time, and people can decide what they want to do with their business. But in the submarket, in the suburbs, for example, taxes are going up and your insurance has gone up. So if you need to keep pace with that, rent growth is something you really want to capture. So make sure to pay attention to your occupancy. And then what we just did, so we're working with a developer and we've underwritten 10 of their deals. And of one of their deals in a great submarket, we went through their entire rent roll and found an incredible delta. They had on average, 9% delta between previous rents to the latest rents that they were just posting on renewal. 9% in 12 months. So that's huge. And that means that some of them had a 2% and some of them had a 15% change. And so what happens in these submarkets, this is a new development, so this is a great stat. What happens is during lease up, when it's very soft, there's a lot of new units, all of a sudden absorption happens and you realize in some cases, like that 15% change, that is the loss to lease that you can make up now that the absorption has happened. Now that there's not a lot of supply competing with you, you can make up a lot of ground. So our thesis to that developer is overall, you can raise your rents on average 9%, but you really want to look at every rent because some of your rents are already pretty close to market, but some are 15% below market because they leased at the right time to capitalize on the supply that people were trying to absorb.
Yeah, I mean, look, it's affordable here. So raising rents by 5%. Look, wage growth has outpaced rent growth since 2022. So there's room to grow rents, and I think if you're an owner, you got to look at it and decide what's best for you and your residents. But there's potentially some good opportunities there.
Absolutely.
All right, thanks, Heidi. And how can our listeners get in touch with you? Michael Commercial, reach out to you guys.
Yes, find me on LinkedIn, Heidi Addo, and send me a DM. Love to chat.
Love it. Heidi, again, really appreciate you. I'll probably get you on here not too long and get another update to see how 2026 is actually going out.
Sounds great. Thanks for having me.
All right, take care. Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.